Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is December the 24th. Obviously, we're getting close to the holidays, and I'm sure I'll make another video or two before it's going to be New Year's. But in the meantime, for those who celebrate, Happy Christmas, Merry Christmas, Happy Holidays, Happy Hanukkah. So whatever it is that you're celebrating, I hope you're safe, you keep warm. Burn lots of fossil fuels while you're trying to keep warm, spend lots of times with your loved ones and your family. And what I'm going to do in this particular presentation is share with you a little bit of information as to why I have been saying during the past few videos that I am buying XLE as opposed to individual energy stocks. Now, just for the sake of clarity on this one, or for transparency, I have been buying some single energy stocks, and those included Petrobras when it dipped below $10, Blackstone Minerals when it dipped below $17, and Devon Energy as well, which I bought for around $60 per share. So what I want to do now is to talk a little bit about XLE specifically, and why it is that I have been buying XLE. In fact, one of my largest positions in energy right now is XLE. So XLE, as you can see at the top of the screen on the header, is what we affectionately call a SPDR ETF. ETF is an exchange-traded fund. An exchange-traded fund, or ETF, trades exactly the same as any other ticker symbol on an exchange. And an ETF allows you the opportunity to purchase a particular index, whatever it is that you like. In my case, obviously, as Mr. Oxy, that would mean energy, and XLE specifically is an energy select SPDR fund, or select energy sector fund. So what I'm going to do is go through their last report, which is kind of the same as talking about an individual stock, but what I want to do with this one is sort of just revisit the annual report, which they published at the end of September. So obviously today it is December the 24th, so it's slightly out of date, but it doesn't matter because it tells you what happened during the past year. The XLE Energy Select Sector SPDR Fund corresponds generally to the price and yield performance of the energy sector as a whole. So as opposed to a few individual stocks in a basket, this is the Energy Select Sector Index that it compares itself to. Obviously, there are different weightings for some of them, so they're not necessarily all the same. During the past 12-month period that ended September 30th, so that's the reporting period, the return for XLE was 44.34, whilst the index returned 44.49. The reason for the small delta between the index performance and the ETF's performance is the fee. And you should always make sure that you know what fees you are paying, whatever it is that you're investing in. Sometimes the fees are hidden, sometimes they are quite transparent. In the case of ETFs, generally they tell you upfront what the fee is, and you can see what it is. So the XLE and the index reflect the returns, reflect the reinvestment of dividends and other income. I, for example, pretty much reinvest all my dividends. So I don't withdraw the cash and spend it. I just buy more, which gives me an opportunity to rebalance as we go along. The energy sector proved to be the strongest sector over the last 12 months, far outpacing utilities as the only other performing positive sector. Much of the strong performance in energy can be attributed to general inflation. Of course, it's no longer inflation, it's hyperinflation, even though the government of the United States might want to tell us that the consumer price index is around 8%. That consumer price index, or CPI, or core inflation as they refer to it, excludes energy and food, which for the most consumers should be included because that impacts them most. Higher oil prices and the Russian-Ukraine war. The Fed took a more hawkish turn and began fighting inflation. Did they really fight inflation? I'm not too sure they're winning that battle, but anyway, they have a number of levers that they can pull. And one of those levers was to increase the rates, and their first rate hikes we saw this year since 2018. Of course, the US government, so Biden administration, noticed that this was not having too much of an impact, so they started releasing oil reserves from the Strategic Petroleum Oil Reserve. So the Strategic Petroleum Reserve is meant to be strategic and a reserve. Now, if you can just willy-nilly start withdrawing and releasing oil from the reserve, then it's no longer very strategic. If you can do whatever you want with it at any given time, and no longer is it really a reserve when you are emptying it out. Now, to be fair, they didn't empty out the strategic oil reserve, but they did release 1 million barrels a day or thereabouts from the strategic petroleum reserve in order to relieve pricing pressure and reduce gas prices. It's worked to a degree because arguably energy prices have come down quite considerably due to the all-out attack by the government. Let's see how long it lasts. As I said at the beginning of the video, I hope you're burning lots of fossil fuels, trying to keep yourself warm in the winter if you're in the northern hemisphere. It's cold today. In Florida, it's about 52, 54 degrees, which for most of the people in the world is actually about 10 or 11 degrees Celsius. But here in the US, using the old imperial system, it's 52, 54 degrees in Florida, which is freezing cold for Floridians. They are already taking out their denim jackets in order to stay warm. On an individual security level, the top positive contributors to XLE for the reporting period were your favorite and mine, Occidental Petroleum, and the two US super majors, Exxon and Chevron. The top negative contributors to the index were a few little companies you've probably never heard of, so I'm not going to spend too much time there, except perhaps for Baker Hughes, which might be familiar to some of you. Now, the thing that you got to look out for here is that just because we've been making merry and making a lot of money with our energy investments, it doesn't mean that this is a trend that will continue indefinitely, right? So you can milk it while it's available, but at the same time, you need to pay attention to the macro and see where your investments are going. And as we probably all know by now, if you've been following this channel, energy has taken a bit of a hit in December. But where are we at? So if you look at the index and you compare it, for example, in other words, the energy select sector index, you compare it to the S&P 500, we look great. Over the last year, we're up 44%, and the S&P 500 is down about 15. But look at it over 5 years, right? So just here on the right-hand side of the screen. So if you follow me across in the row that says 5 years, and then below that 10 years, and you look at energy compared to the sector, you see energy over 5 years underperformed the S&P 500, 6 to 9, and again, over 10 years, 3 to 11, right? So we've been making merry and making a lot of money, but these trends do not continue unabated and very often get disrupted because of macro events, including some that I just mentioned a minute ago, like the Russian-Ukraine war, an inflationary environment, and so on. Of course, if you have been invested in energy, you have done really, really well. Since I launched this channel, around early 2020 or so, when I was bored out of my skull and everything had crashed because of the pandemic, I started the channel around about the same time Occidental Petroleum released their first tranche of warrants to common stock investors, which included me at the time. And, I thought there's a lot of good stuff happening in the market, and energy is so cheap. You can almost throw a dart at the energy sector and buy almost anything. But we chose well because we chose Occidental Petroleum. But look what happened, right? So the dotted line at the top of this graph here is actually the S&P 500. It's not the energy sector. The energy sector is the gray line towards the bottom here. So if you manage to get in around the time I started this channel, which, as I said, was sort of early 2020, you have done exceedingly well if you had invested in some energy stocks. And obviously, most of us enjoyed the benefit of having Occidental Petroleum in our portfolios, which right-sized your entire portfolio, I hope, for you anyway. And of course, pretty much all the energy stocks had a great run from, you can see sort of, if you look at the graph here, from that period, sort of starting out in 1919 all the way through to where we are today, you've had a great, great run. The S&P 500's return for investors here was probably mostly driven by technology stocks, which subsequently crashed. So, you can't just rest on your laurels and say, I'm just going to ride this thing and ride it and keep taking profit. Not going to work that way, right? So you need to stay tuned. You need to do your due diligence and stay up to date with what's happening in the marketplace. Back to the energy select sector fund, the SPIDER. What's its top 5 holding? Well, if you look at the the total of the two top holdings, which is Exxon and Chevron, you got 23 and 20 basically, so 43%. And then almost the rest of it, the next three, make up more than 55% of the total Energy Select holdings. So in XLE, when you're buying XLE, you are literally just buying Exxon, Chevron, and then to a lesser degree, companies like Conoco, EOG, Pioneer Resources, Devon Energy, Occidental Petroleum, etc. But in the top five, those are the top five. If you invested in any of these, you were probably doing quite all right. If you look at it on a pie chart, which is kind of interesting, you can see 92% of XLE is oil, gas, and consumable fuels, and only 8.1% is energy equipment and services, which is one of the reasons why XLE has been performing so well and tracking the entire sector, because 92% was in oil, gas, and consumable fuels. I think energy is trending higher again. And in terms of where we are right now with the WTI price sort of edging up towards $80 and Brent already over $80 per barrel, I think it's going up much higher than that. I know some people have thrown some ridiculous numbers out there, $150 to $200 a barrel. I don't see that. I think $100 a barrel, maybe slightly above that, is certainly in play. So we'll have to see what happens. But if anything, energy is going up higher again as opposed to lower, especially from a US point of view as the largest producer. As the releases from the Strategic Petroleum Reserve winds down, you might see energy spike once again. Now, because it's the holiday seasons, I thought I'll show you the worst performing sectors before I show you the best performing sectors. But man, if you were invested in technology services, consumer discretionary, etc., your portfolio is probably not looking very, very good. These are the top 6 losers. How about the top 6 winners? Well, really, there are only 2. And really, there was only 1. 2022, year to date, stock performance by sector and industry. There is only 1. Energy, 60%. The small little green arrow I added there just for my personal amusement. If you're in utilities, you're up a little. If you're in anything else, I personally have a lot of holdings in financial stocks, but I've had them for a long, long time. And with reinvested dividends, my portfolio looks okay, even though financials have pulled back quite considerably. Fact of the matter is, if you're in energy, you have done really, really good. And that's an outlier because everything else is red. Looking at it on a graph, look at the performance, this red dotted line here. This is energy. Man, we've been having a good time. Good times don't last forever, guys. So make sure that you stay in touch and make sure that you know where the market is going. There's the reference I made to information technology. How about consumer discretionary, negative 32, IT, information technology stocks? Remember when all our favorite people on TV like Jim Cramer were saying FANG, FANG with a double A because it was Amazon and Alphabet, Facebook, Amazon, Alphabet, Netflix, Google. Buy those companies, buy. Man, you got hurt badly if you listen to that advice. How about looking at the sector performance month to date? Well, here you see a change, right? Now we have energy right here at the bottom, the light blue line, worst performing sector for the month. However, to be fair, if you look at this big red circle I drew here, pretty much everything is negative except for utilities, which is slightly positive, 1.3, and healthcare, 0.2. Everything else, you are taking a hit. Just to wrap it up here and give you some good news, these are not stocks I hold. I just added them because it's almost too good to be true. And when things are almost too good to be true, sometimes they are too good to be true. And that's, for me personally, too bad that I held none of these stocks in my portfolio. I'm not familiar with them. I haven't done a deep dive on any of them, but look at the performance here. TISI, these are energy stocks, 400%, 127%, followed by a few laggards here who really did badly, up 108, 93, 85%. So those were tough. Anyway, as I said at the beginning of this video, it's holiday season, and I thought I'd make a quick video just to talk a little bit about XLE. I said at the start of the video that I have invested in individual equities as well, which includes for me of late Petrobras, Devon Energy, and and Blackstone Minerals. So in my energy portfolio right now, my largest positions by far include some companies that we talk about often. Obviously, Occidental Petroleum is still right up there amongst the top performers. So is Energy Transfer. And then I have Pembina, which is a pipeline company out of Calgary, Alberta, Canada. I have Enbridge, which is a Canadian major company that is natural gas pipelines, etc., integrated oil. And then I have some smaller holdings now, which include companies like Devon Energy, Blackstone Minerals. I've built up a fairly large position in Petrobras. It's actually creeping up to about number 4 on my total portfolio. And I have a huge position in XLE, which is not an individual stock. It's just an ETF. But guys, on that happy note, if you're an energy investor, you have reason to smile. Even though we've taken a hit in December, still looking pretty good year to date if you're holding some of these stocks long. So on that happy note, happy holidays. I'll talk to you guys soon. Have a great time with your family and friends and loved ones. And remember, hug someone and spend time well and enjoy. Bye-bye.